Assalamualaikum and a very good day to Doctor. So we are from Group 39. Today we going to presenting the topic about the application of Sharia principles in family takaful products at AIA Public Takaful. So our group consists of me, myself, Muhammad Zafran Zahin, Muhammad Danish Iskandar, Muhammad Ikram bin Arif, and Amira binti Muhammad. So for this topic, we're going to divide it into 4 subtopics, which is the definition of takaful, profile of the company, products of AIA Takaful, and last but not least is the principle and practice according to Sharia compliance. Without further ado, let's begin with definition of takaful. Definition of takaful. Takaful is derived from the verb of Arabic word, which is kafala, and also meaning guarantee, bail, warrant, or an act of guaranteeing one necessities. So takaful is a joint guarantee where a group of individuals agree to mutually guarantee one another against a specific loss. So takaful also refers to an agreement for mutual indemnification in providing protection and recompenses to the participants who suffer from hazards or loss in the context of Islamic insurance. Accounting and Auditing Organization for Islamic Financial Institutions stated that Islamic insurance is an agreement between persons who are exposed to risk to protect themselves against harms arising for the risk by paying a contribution on the basis of commitment to donate. Following that, the insurance fund is established as treated as a separate legal entity which has independent financial liability. The fund will cover the compensation against harm that befall any of participants due to occurrence of the insured risk in accordance with the term of policies. So the concept of takaful can be divided into 2 subsections, which is among participants and between participants and takaful operator. So among participants is governed by the contracts of takaful and tabarruk. Tabarruk is in general takaful is agreement by a participants to relinquish as a donations as a sum of contribution that he agrees to pay into takaful funds. The concept of tabarruk is a pillar in takaful systems that makes a gharar, which means it's uncertainty, element allowance under the takaful contracts. So based on participants and takaful operator, is governed by either by contracts of mudaharabah, which is mean profit sharing, or wakala agency, whereby the takaful operator is appointed to manage the scheme. Other Islamic contracts may also use such as a combination of mudarabah of wakaf of trust. So based on the underlying contract, the takaful operator will receive a fee or share or for the operating profits as reward for managing the takaful scheme. Despite we going to compare and contrast between insurance and takaful. So for insurance, the insurer will charge the actual operating expenses to generate insurance funds, while takaful, the operating expenses can either be borne by the shareholders' funds and the mudarabah model, or be charged to the participants as a fixed upfront charges under wakala model. For the investment of fund insurance, there is no restriction apart from those imposed for prudential reasons. For the takaful assets of takaful funds are invested into Sharia compliant instruments, while the operating profit for insurance is all the operating profit will be credited into the shareholder funds. And takaful, the operating profit, all the operating profits in the end of the year will be contributed to the takaful operator and eligible participants based on the pre-agreed profit sharing ratio as stipulated in the initial contracts. Now we're going to proceed with the principle of general takaful contracts. So based on the established legal maxims or FIC concept, general takaful contracts assimilates 4 main general insurance principles, which is the firstly permissible takaful interest, utmost good faith, principle of indemnity, principle of subrogation. Under permissible takaful interest, it exists when there is a relationship between participants and the subject matter, normally arising from several situations as follow. Firstly, ownership of property. potential legal liability and contractual rights. Of utmost good faith, the contract may be void if any material facts are withheld from disclosure or any misinterpreted. The law may also impose criminal penalties on takaful operator who make false statements. The nature and variance resulting from the underlying contracts employed by the takaful operators necessitate greater disclosure and transparency from all the contractual parties. Of principles of indemnity, to put the affected participant that has just lost, the takaful system offers cash compensation. So to prevent the participant from profiting from the claim, it ensures that the participant does not receive more than his genuine amount of loss. So this rule only applies to contracts involving property and liability takaful. Health and personal accidents takaful certificates are not indemnity contracts because there is no way for a monetary payment to truly compensate for a fatality. Last but not least is the principle of subrogations. So the takaful program is entitled to compensations from the entity responsible for the loss. So the participants, in this sense, the individual in the scenario, are compensated by the third party via the takaful operator. By preventing the participants from receiving payment twice for the sum loss and making money off the loss, it strengthens the indemnity principle. So that's all for me. I will proceed to the next presenter.
Assalamualaikum and hi doctor. My name is Amira and I'm going to present on the profile of the company. AIA Public Takaful BHD is a Malaysian takaful company jointly owned by AIA Group Limited, Public Bank Berhad, PBB and Public Islamic Bank Berhad. For the establishment of this company, AIA BHD has integrated both of its two former takaful companies, which are AIA AFG Takaful BHD and ING Public Takaful Ihsan, under a single license and brand, and will now be known as AIA Public Takaful BHD. This figure shows the structure of the establishment of AIA Public Takaful. This firm was established on March 11, 2011 and its primary focus in the management of family takaful business, particularly those tied to investments. AIA Public is a public limited liability company that was formed and has its domicile in Malaysia. AIA Public is also devoted to providing the appropriate Sharia solutions to satisfy the demands of our consumer during the various periods of their life. Board of Directors, Responsibility and Oversight. The company has completed all of the essential procedures to ensure compliance with the requirements of Bank Negara Malaysia and the Sharia governance framework for Islamic financial institutions. At the annual general meeting of the shareholder, the director must present themselves for re-election to the Board of Directors and report to the shareholder on the company's performance and future goals and strategies. There were 6 members of the board, 4 of whom were independent non-executive director and 2 who were not. And for another part, which is the financial statement, the board of directors is ultimately responsible for ensuring that the accounting records are properly maintained, that the financial statement of the company are prepared in accordance with MFRS and IFRS, and that these statements are in accordance with the provision of the Company Acts which were passed in 1965. This information includes things like income and total revenue as well as assets and other things. This is the income statement for the AIA Public Takaful BHD and it displays the overall income together with other relevant information. Continue for the next slide, which is I will explain on the product in AIA Public Takaful Sdn Bhd. As in AIA, there are various product offered based on the budget and preference of the customers. Basically, AIA Public Takaful offers life takaful products under family takaful together with investment-linked takaful business. They are not offering takaful product on general takaful, and here is some of the product offered by AIA Public Takaful. There were 6 of it, and I will explain in detail on the next slide. So for the first one, A-Life Med Regular I is a medical Cakaful plan with a regular contribution that offers all-inclusive coverage for hospitalizations and surgical procedures up to the age of 100 and has no lifetime limit. Basically, this product will provide the customer the AIA medical card to ease the customer hospital admissions and discharge. And the second one, a Lifelink I investment linked, it is additional coverage if you pass away or you become permanently disabled. The customer will be paid in cash at age 55 or the 20 year. Some benefit of the product are is covered that until age 100 and total permanent disability up to age 70. And the third one, a Life Signature I. This item is an investment linked plan with a regular premium that protect against total and permanent disability as well as death. It provides a high level of security with a minimum guarantee amount of 500,000 and the customer are required to pay for allocated contribution of wakalah fee. And some of the benefits of the product are death benefits, accidental death benefit, and rewards with 100% of account value at maturity. The ASME Plus I software was developed specifically for the purpose of administering employee benefits plans for small and medium-sized business, particularly those with 5 to 150 staff members. It is a one-stop shop for all your workers' benefit requirements, giving the highest level of protections against unforeseen death or incapacity, severe illness, and rising medical costs. The fifth, a Life Joy I, mother and kids. This plan offers the option to invest in addition to providing security for kids. Other advantages include the ability to protect your child even if you are pregnant with that child, to enhance your child early years coverage, and to have an all-in-one protection and savings plan. Okay, the last one, which is number 6, the A-Life Lady 360 I is a complete female plan that satisfies your requirement for protections. It was developed with female users in mind specifically. It is a sort of protection against serious illness. The advantage of purchasing this product are like you will have the opportunity to protect your child, and you will receive cash reward equal to 1% of your coverage amount, and etc. So
good morning everyone, my name is Muhammad Ikram bin Mu'arif and I will be continuing with the presentation of the next part, which is the principles and practices according to Sharia. As you can see, these are the common practices and principles in conventional insurance. AIA Public Takaful, like other Takaful insurance companies, they bases its family Takaful policies on Sharia principles, and there are a number of common practices that are widely used throughout the insurance businesses. Namely, on the left side of the slide you can see there are riba and gharar, which are the forbidden one, and on the left side, on the right side of the slide is the qard, hibah and mudarabah, which are the permissible one. The mention of riba can be found in several places throughout the Quran and Hadith. From the Quran itself, we can see that it is clearly prohibited to practice riba. It was mentioned in the early part of Surah Al-Baqarah and at the later part in Surah Al-Baqarah. And in the Hadith, the Prophet reported to have said there is no riba in hand-to-hand transaction, but there is riba in deferred sale. So from here we can see that this hadith has made it clear that interest-free transactions are permitted, but transactions in which the return is contingent on the passage of time are not. Riba was forbidden in the early days of Islam in order to stop the rich lenders from taking advantage of the poor. The term riba has come to mean a variety of financial transactions where the return is based on the duration of the transaction or the amount of the loan, in addition to the traditional meaning of which is simply translated as the charging of interest on loans. That's what riba means. A direct translation of it, which is the charging of interest on loans. So, as for Gharar is a concept in Islamic finance that refers to uncertainty. This is what the direct translation perceives. Uncertainty, ambiguity, or deception in a contract. It is considered haram as well in Islamic law, as it can lead to exploitation or manipulation of the parties involved in the transaction. It can also be described as a sale that has not happened, such as selling fruits that are not harvested. This is another general, more broad definition of it. The early mentions of gharar can be traced back in the 12th and 13th century, where Ibn Rushdi has wrote extensively on the issues of gharar and why it should be avoided. This indicates that the concept of gharar has been existed for centuries. But in our world today, gharar has become a somewhat general term, much just like the riba. which means in the terms of sales or financial transaction, the actions that are deemed to be assessed in relation to the potential for misunderstanding between the parties and the degree of ambiguity around the delivery of their products or the payments. So much just like the direct translation, these are the uncertainties that are going to take place in the process of the two parties. We can see how related the modern interpretation of Gharar and the conventional takaful insurance. So this begs the question, why is takaful is not considered Gharar? I mean, we can also see it in this way too, since the insurance company pretty much fill in the spot of the definition of Gharar. There are people that might not get the benefits of the insurance despite having been paid the amount in full. So in a way, this is actually also an uncertainty. So in order to avoid Gharar, AIA Public Takaful has a very concise and clear agreement with the risks and benefits clearly defined for participants. So this helps to prevent misunderstanding or disagreements between the company and its participant. As for the other definition of Gharar, it is important to see that we are actually not buying an uncertain service that will only benefit us in the future, although that is actually the explanation of insurance. But what we are actually buying here is a peace of mind in the times of trouble. So we actually get what we wanted at the moment we opted for a takaful service. So this is why takaful is not considered Gharar.
So hi, Assalamualaikum. My name is Danish. I will continue for the next part, which is the permissible actions or permissible Islamic concepts under the AIA family takaful. So the first one is Qard. Qard Al-Hasan is the name of an interest-free loan in Islamic finance. And this principle has been used under the AIA Takaful family plan. For example, the name is Medic Family for medical coverage of the whole family members. So why is it important? Qard is that whenever there is a damage or disease that or incidents that are not covered by the insurance policy, so the Takaful or the AIA Takaful will provide and lend some money to the family without charging interest. So this help how the takaful product distinguish the premium for the and payment to the family in need with intention to lift the burden of the family without charging interest and with giving them chances to have healthcare. So next part is Mudarabah. Mudarabah is a mutual agreement determines the profit split in accordance with its percentage. It's not only insurance covered, they also provide saving and investment features. So the concept of Mudarabah is applied as joint agreement for the participants and Etiqa's investment gains or losses, meaning that they share the same proportion of loss and also gain from the investment done by the AIA Takaful family. So in general, the aforementioned business model has been providing participants an appealing share of profits, even though the actual profit payable to each entitled participant would vary depending on the profit sharing ratio, as I said before, their proportion, the amount of profit. So it is also included in the family plan for family to extend their family's wealth, for example. So that is the concept for provided under the AIA family takaful. So then for the last part is hibah. Hibah is Islam defines hibah as voluntary transfers of property ownership to someone else without any demand for payment or retaliations. So meaning that it is different from inheritance, and I will say that these also are provided named as hibah takaful, and the recipient of the takaful grant is the absolute recipient of the compensation, meaning that when someone give you hibah under the hibah takaful, there will be some amount of money when the premium holder disease, and hibah is very important to lift the burden of the family after there is unprecedented event happen to the premium holder. So why hibah is important? That is ensured that any unsettled business, for example the debts, the growth of their child, and then the family's financial situation is secured after someone is dead in the family. So one of the family members is dead. I think that's all from us group. So with that, thank you.